Thank you so much for joining us. Happy Monday to you. I'm Marlon Bowling, your tour guide to the ag commodities. Well, I'm joined by Brian Hoops, and he's the president of Midwest Market Solutions in Springfield, Missouri. And Brian, as we open things up here this morning on a Monday morning, little interesting development here is before we take a look at our prices, a little tidbit off the news wire here a moment ago from USDA. You know what that means? A lot of times in the morning, they will have an update. It could be an overnight export sale. It could be a cancellation. It could be anything like that. Let's see what it is this time. It is a sale, and it is a sale to not to China. It's to the Philippines, and it's not corn. It's not soybeans. It's soybean meal, 225,000 tons of soy meal to the Philippines, and I believe this is what you would consider old crop delivery. So, Brian, that's kind of an interesting twist here in the news. What do you think of that?
Well, yeah, we're seeing more soybean meal sales than normal this time of year. And I think that will continue because you have Argentina, which is the world's largest soybean meal exporter, pretty much out of the market after a drought that ravaged their soybean crop this year. So not a real surprise. U.S. is going to take away some of that business and take over the leadership there. And if you remember from last year, we saw the same thing happen in our corn exports where we had the crop stress in Brazil, Argentina that allowed us to export a lot of crop into the world marketplace. Not so much this year. Brazil has a monster crop that they're exporting a lot of corn, a lot of soybeans, and it's really undercut our values and limited how much exports we're able to do. And so, our export market's very slow for both corn and soybeans. In fact, our new crop marking years are even worse than what the old crop is at this time a year ago. So we're off to a very slow start. Now, the good news is we're starting to turn our attention more towards weather as we get into looking at what's happening in the month of June. And normally it's summer, so it gets hotter. And right now it's kind of a warm, dry stretch until early part of June. So maybe the markets want to add back a little bit of premium in here. It certainly will allow the remaining corn and soybean acres to get planted in a timely manner. And then the key becomes, do we get that rainfall after a little bit of a drier stretch? Do we come back with the promised rainfall after June 7th that's forecast, or does it stay hot and dry? And that's where your larger term price direction is going to come from, is that mid-June into the end of the June forecast.
Right. Okay, let's take a look at our overnight trade then. Now, these markets would have closed before we got that soybean meal announcement a little bit ago. So just wanted to point that out. So we finished up the evening trade, the Globex market, with July corn 6 3/4 higher at 561 1/4, and December 3 1/2 higher at 503 1/4. In those soybeans, we had the July 13 1/2 higher at 1320 3/4. And you had November new crop 10 1/4 higher at 1185 3/4. All the contract months were showing double-digit gains overnight. Then you get to the wheat market, and it went the other way. In Chicago, July was down 3 cents at 602 per bushel. In Kansas City, man, it's just relentless. Since we've had that wheat tour, it's been downhill ever since. July KC wheat down 9 overnight at 815 1/4, got as low as 807 1/4. And if you look at Minneapolis wheat last night, we had July down 4 cents, finished up right at exactly $8, got as low as $7.93 in the overnight session. And looking at the cotton market, well, we had the July contract 29 points higher at 87.01 this morning. December down 3 points at 83.86. We'll come back and talk more with Brian Hoops, and we'll take a look at the outside markets and our livestock trade here on a Monday right after this. All right, we're back with you, and we're talking with Brian Hoops, and he is with Midwest Market Solutions, and he's based in Springfield, Missouri. So it sounded to me like we kind of had the cash livestock trade out in the country last week showing a little bit of resilience after selling off here for 2 or 3 weeks. So what did you hear as we headed into the weekend as far as final updates?
For the most part, 170 is going to catch the bulk of the trade in the Southern Plains, steady with the week prior. There was some trade, very few had, but at 173, 173.50. I think the Fed Cattle Exchange had some 171 trade on it. On a dress basis, we were about $2 higher than last week. So right now, the calls are steady to better following this cattle on feed report numbers that came out late Friday. They pretty much as expected. I don't think we're going to get any major moves out of the futures market based off of that report. It's constructive. It tells us what we already pretty much knew. Numbers are tight. They're going to remain tight for quite some time, and we're not going to replenish that herd real quickly. So it's a market, I think, that remains very stout here as far as the cash markets, and we probably put in our summer highs. We also probably have put our spring highs, probably put in our spring lows and ready to make a move higher into another run higher into the summer months and see a little bit stronger cash trade once again, because these numbers still are going to remain tight out there. Packers for the second consecutive week had about a 640 head kill week, so that's a very strong indication that they do need some cattle.
Well, let's look at these prices then that we had according to bar chart last Friday. These are what we had going into the weekend, and that was ahead of that cattle on feed report that came out. And as Tammy mentioned earlier, it just really was as expected all across the board. We had the June live cattle 20 higher Friday at 165.72. August was up 67 at 164.30. That'll be our starting point here today. And on the feeders, we were a little higher across the board. The August contract was 60 higher at 235.10. So we'll use that as a gauge for a starting point today. And on the lean hogs Friday, another nasty session, yet another one on the nearbys especially. June was down $2.27 at 83.02. The low was 82.82 for a benchmark. We'll have to watch that level today, see if that holds or not. Brian, great information. Thank you for joining us here today on a Monday. And we'll try and talk with you once again real soon. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So